run through who Blevins Franks are in case you've never come across us on the internet or anything. Basically, we have 22 offices across Europe, and in Portugal we now have 2, down in the Algarve, and a new one we've just opened up kind of between Lisbon and Cascais. I was over in Portugal earlier this week when we were doing seminars in Cascais and up on the Silver Coast, and I'm back on Sunday when we're doing 4 across the Algarve. So it's probably our most popular country at the moment, and you'll see some reasons why when I go through the slides. But also, I just think people are finding it very, very attractive. Algarve has always been the busiest, but what we're finding now over the last 2 or 3 years is that Lisbon and Cascais, and actually now going up the Silver Coast. We did one in the Silver Coast as well last week, and that was very, very well attended by new people. We asked for a show of hands, and it was 80% new people arriving that were at the seminar. So a huge number of Brits that are moving out that way, and actually now moving further up the country as well. We've been around for about 44 years now, so quite a long time in our kind of business. We're in 7 different countries, 22 offices across Europe. As I said, 2 in Portugal at the moment, but we could be expanding further north. 43 partners and private client managers, and they're the kind of people effectively that would be dealing with clients and potentially with you. We're now over 200 employees. We've got a very large administration office in Malta of about 130 people that deal with all the back office and all the customer services side of things. And we're managing or advising about 2.5 billion euros worth of client money. One of the reasons why Blevins Franks kind of stand out is there really isn't anybody else out there doing what we do in terms of a combination of tax and wealth management or financial planning. And it really does demand a very deep understanding of British nationals living in Portugal, and in particular the cross-border side of things, which is the interaction between the UK and Portugal and how they mesh in the middle and how that actually works. As I say, most of our partners have been in their roles for 10, 15 years. They've all gone through what you're going through, perhaps in moving to the new country, so they know an awful lot about the local area in terms of where the doctors are, the best doctors, all that kind of stuff. The normal stuff that kind of blocks you up perhaps when you're trying to settle in. All of our people are authorised by the FCA, the UK financial governing body, to advise in the UK and in Portugal, and they're all regulated and qualified under the FCA as well. Obviously, Brexit is quite important. You'll see a few slides as we go through when we're looking at things like state pension, etc., where we talk about Brexit. But to stay absolutely up to date with what we're doing, just go to the website. We do have a Brexit page, and that kind of looks at what's happening at that exact moment and anything that's being reported in the press. Actually, Brexit isn't looking too bad for new arrivals if you're moving potentially to Portugal up till 31st December 2020, and you'll see that as we go along. After that, we really haven't got any information at this exact moment in time. Legal residency in Portugal, that's different from tax residency. That's the fact that you're allowed to live there and what you have to do to be able to do that. Obviously, at this exact moment, we're still in the European Union fully, and therefore there's freedom of movement. And in terms of being able to move to these countries, you don't really have to do a great deal. You're able to move there and live there freely at your will, and that will remain the case up until 31st of December 2020. So if you were looking to move just for a couple of years, you don't have to go through a great deal of process to actually move there. You can do that under the current existing rules. But if you're looking at making Portugal your long-term home for 10, 15 years or so, then you need to be aware of the new rules that are going to be coming in post 30th of March 2019. Effectively, you're going to be asked to apply for residence cards, and there'll be a new style annual residency cards, and then after 5 years you'll be entitled and issued with permanent residence card, and that effectively will allow you to live in the country no problems at all. There is existing residence cards that are generally used by non-Europeans to be able to live in Portugal, and in some cases we're seeing a lot of our clients actually go out there and apply for those at the moment, even though they're under the old style regime. Effectively, once you're in the system, pretty much when the new ones come out, they'll just replace what you have with the new card, and you're already in the system up and running, and it leaves you, obviously means that you should get the new card very quickly with no problems at all. They've also said that the new cards should be dealt with efficiently and smoothly, so they should be issued pretty quickly. and the replacement should be issued very quickly, and the actual process should be relatively cheap to do. They don't want to make it difficult for people to move on a financial basis. In terms of qualifying for residency cards, there's various different documents you'll have to come up with, things like proof of ID, passports, etc., and also proof of wealth. Now that proof of wealth can be bank statements, can be pension certificates, all that sort of thing. But how much you have to have isn't particularly demanding. It's going to be something in the region of what might be an income of, say, someone who would be getting an unemployment benefit in Portugal, or what someone might get as a state pension in Portugal. So those levels are pretty low. So it's not going to be too hard to satisfy what they call their self-sufficiency. They don't want you to be a demand on their society, a burden on their society financially. So you need to be self-sufficient, but that level of self-sufficiency is very low. From a tax perspective, well, if you spend 183 days in Portugal in a calendar year, then you're going to be regarded as tax resident for that year. So you have to be careful, obviously, on the number of days that you're spending there. But if you're arriving in Portugal with a view to move there permanently anyway from the outset, and if your permanent home's in Portugal and the majority of your economic interest in Portugal, then you're going to be regarded as being tax resident in Portugal pretty much from the day you arrive. You have to do various different things when you're leaving the UK to make sure you close off your affairs with the UK authorities. So if you're already doing a self-assessment tax return, you need to look up a form SA 109 and complete that. If you don't do a tax return, because all of your affairs are dealt with directly with the tax office without a return, you need to get hold of a form P85 and complete that. All you're really doing is you're saying to them, I'm leaving on this date, my residency will end on this date, so that they can bring your affairs up to date and finish it off. From a pension perspective, you need to let the International Pension Centre know in the UK, and also if you're coming up to state pension age, you need to be aware and apply for an S1 from the Department of Work and Pensions, because that is quite important from a healthcare perspective in Europe. It will allow you to get healthcare on the same basis as a normal Portuguese person. Also, you may well have arranged your tax affairs, your financial affairs, as tax efficiently as possible in the UK, using things like ISAs, premium bonds or whatever. All of that pretty much falls away and goes out the window when you move to Portugal, because Portugal has its own tax efficiency rules, and things like ISAs don't qualify as a tax efficient investment in Portugal. They will be completely looked through, and you'll be taxed on the underlying dividends and interest that arise. One of the other issues is, when do you sell your main home in the UK? If you're moving to Portugal, you're probably going to be disposing of that. We do see a lot of instances of people who retain the main home until they've settled down in Portugal and then look to dispose of it afterwards. You need to know what the main home exemptions are in Portugal, just like there are in the UK, and the timing of when you become resident and the sale. You don't want to be exposing yourself to any tax on your old main home in the UK than you need to. So come and talk to us, have a word. Obviously, each situation changes with individual specifications. Once you've arrived, do you apply for that new residency card? Really is a decision that needs to be made on arrival. And can you qualify for healthcare? Well, you will qualify for healthcare if you've got the S1. Let's get there. If you've got the S1, for the first 90 days that you're there, you're not covered by that. So you need to apply for a European health insurance card, which will cover you for your first 3 months there. And they will continue after Brexit. So that's really for a short-term cover. After 90 days, you've got two different bases of qualification in Portugal for healthcare. Your S1 for the Department of Work and Pensions. And if you're legally resident, if you've got the residence card, then again you can get your healthcare on the same basis as the Portuguese. And again, if you're getting it prior to the UK leaving the EU, then you're going to qualify for it after we've left on a continuation basis. The S1 system will continue as well, so should you be issued with an S1 after we've left the EU, then you can use that as well going forwards. Well, I'm jumping around. Okay, so taxes in Portugal. Well, Portugal kind of stands out in Europe as being, as I've described it, a very intelligent tax system, because it basically offers new arrivals low taxes because it attracts people to the country. So we'll have a look at a new system that they use. Obviously those people that are moving to the country because there's low taxes spend their money there, and in spending their money that creates jobs, and those people that have jobs pay tax. So they see the circular flow of spending and taxation. And for new arrivals in Portugal, as long as you haven't been in resident in Portugal in the previous 5 years, you can apply for something called the NHR regime. And you really want to be doing that within the first 6 months of arrival. If you're looking at working in Portugal, then it will mean that you're only suffering 20% taxation on high value occupations. But the real benefit is really for those people that are moving to Portugal as retirees, and in particular around pension income. Effectively, for the first 10 years, then certain sources of income under non-habitual residency or NHR are tax-free. And because of the way that the tax treaty works between the UK and Portugal, company pension schemes, private pension schemes and the state pension, if you're living in Portugal, are taxable in Portugal, not the UK. And that falls outside of UK taxation, falls into Portuguese taxation, but because of this special relief, you won't suffer any tax on your pension and certain investment income in the first 10 years. But as it said there, it does need planning to make it work. Okay, so what you have in the UK as well, to complement this, is pension freedoms, where you can, if you wish, take the whole lump sum of your pension in one, so the whole of your pension in a lump sum in one hit. If you do that whilst in the UK, you could pay up to 45% tax, the highest tax rate, because in the UK, if you take everything out in one go, it's taxable in the year you receive it, and obviously if you're taking the whole of your pension fund, you're liable to move into the 45% rate band. Now what you have then, potentially if you're moving to Portugal, and you take it all out in one go, it's taxable in Portugal, not the UK. You're not suffering 45%, you're taxable under NHR, you're suffering 0% tax. So we've had our pension contributions on the way in, tax relief on those. They grow in the pension fund tax-free, and if you've moved into Portugal, you've got potentially a tax-free payout, which is all very, very attractive. Okay, so please, if you're interested in that, if it's an issue for you, please come and talk to us. Just to give you an indication of what the tax rates are like in Portugal, they've got similar top rates to what we have in the UK. If you're in that region, these are the kind of things that will apply to you on other income that isn't covered by NHR, or once you've come out of that 10-year NHR scheme. There's additional layers of tax at the moment, as well as the moment, which some of these may be well falling away as we move out of the kind of credit crunch scenario. Again, additional liabilities if you're very high earners. So, what are you taxed on? Well, if all you're doing is buying a holiday home, you're not actually moving to Portugal, so you're not going to be tax resident in Portugal, then actually in Portugal you're only liable on Portuguese source income. So if you're only going to have a bank account there just for general money movement or whatever, that's probably not going to give rise to a huge liability at all. But if you do move to Portugal, then Portugal works on a residency basis. If you're resident there, you're taxable there on your worldwide income, obviously ignoring the NHR scheme. And as I said, be careful of the UK things you would have done for tax efficiency. They're not going to be tax efficient over there, as well as all the usual different investment sources of income that you might have. This is what I discussed earlier on. So the way that the tax treaty works between the UK and Portugal is UK source state pension, company pension or private pension. Under the double tax treaty, if you're living in Portugal, Portugal has the taxing rights on those sources of pension income, not the UK. But government pensions, which are things that are paid to people like teachers, etc., they always remain taxable in the UK rather confusingly. Okay, so 4 different sources of pension income, 3 of them would move to be taxed in Portugal, 1 of them would remain taxable in the UK. And NHR would allow you to receive those 3 sources of pension income tax-free for the first 10 years. The state pension, one of the things that people feared was, were you going to lose the inflationary increases in us leaving the EU? A bit like what happens to people who've moved to Australia. Does it get fixed and therefore you can't get the increases after that? the UK have confirmed that they will be uprating pensions, as they call it, which is giving the inflationary increases on an annual basis going forwards. So that's nice to know we're going to be getting that post-Brexit. In terms of looking at the situation of dying in Portugal, I'll put it rather frankly, it's obviously a little bit difficult because the UK law system is common law and that of Portugal is civil law. In the UK, you're allowed to leave your assets to whoever you please, and in leaving them to whoever you please, you just have a flat rate exemption of 325,000. Anything over that is at 40% in your estate. There is some new relief coming in on the main home, which will take that up to about 500,000 per person. But it's a very, very simple system. In Portugal, like much of Europe, adopted the forced heirship regime, which means that if without putting any special provisions in place, then assets have to be passed in certain percentages to children. But what the Portuguese do, unlike some other nations, through their civil code, they already allow you to include within your will to say you'd prefer the law of nationality to apply, where you're a British national, and therefore under British national succession law, you can pass your assets as you please. And that's even been reinforced by a new EU law that came in 2 years ago, new succession regulation. So that's emphasised that even more. The one thing you do have to be aware of, though, is that even though you may be able to pass your assets to whoever you please, if you're passing Portuguese assets, then they're going to be taxed according to the Portuguese rules on what the liability is. And effectively, the liabilities will be higher if you're giving them to people that are further detached from you. So the closer that person is to you, the lower the rate, and the slower it goes up in tax. The more detached they are from you, the higher the rate will end up being. And we can show you that in some of our brochures. As Brussels 4, which is was the new succession regulations that we just talked about. In Portugal, they abolished inheritance tax in 2004, but rather confusingly for us Brits, replaced it with something called, that translates to us as stamp duty. So it's only 10%. It's only on assets located in Portugal, which in most cases for most people here is going to be the real estate. But also, effectively, you're passing those assets to who you would normally pass them to, your spouse, children or parents, and they're exempt gifts or recipients anyway. So again, Portugal showing how clever it is in its tax system. So you can make this work very well for you from a succession perspective as well.